What's up, YouTube Nation? Eric here, Mr. Fired Up Wealth. November, if you can believe it, November is here and you're wondering, Eric, what stocks should I buy now? I've got your back. I've got 10 stock picks that I think are attractive at these levels and lower. Now, a handful of these have already reported earnings. A few of them are going to report earnings as soon as this week, and that's something to pay a close eye to. So I'm going to go through each stock and explain my thesis and where I think the levels are that are attractive to buy. I'm excited to bring this one to you. Top 10 stocks to buy in November. Let's get started. Now, this first stock pick was a buy in Discord at $115. It has ripped a lot since then. It's actually at about $154 pre-market. Part of the reason for that is Johnson & Johnson is actually going to be doing a merger and acquisition here. They're going to be buying ticker ABMD. Now they're going to buy this $16.6 billion upfront payment. They're going to pay cash, $380 a share. That's a 50.7% premium. So these are not stock picks to buy now in November. It would have been maybe a day ago. But if I'm looking at Moderna, the reason I like Moderna, there's a few things. The PE ratio, 4.58. It seems really inexpensive. The reason for that, well, it's a pandemic play. And what's the growth look like in the future? But these guys are sitting on a ton of cash. How much cash are they sitting on? Well, according to macro trends, they're sitting right now, end of June 30th, 2022 quarter, on almost $8 billion in cash. $7.897 billion in cash. Now, there's a couple things that could happen with Moderna. Well, there's three things. One, the company can continue to grow and probably be fine the way it is. They actually just have an agreement with Japan for their COVID vaccine. They're doing a lot of great stuff. But here's the thing. They're sitting on a lot of cash. So they could go out and they could buy some of those smaller firms. Maybe they buy a Twist Bioscience, a PacBio. There's a bunch of different possibilities of stocks that they could buy, especially smaller plays. The other possibility with Moderna is it could be an acquisition target itself. Now, it is a $58 billion company still, large cap. It's way off of its highs. In fact, this thing traded, if you look at a chart, this thing traded back $376.65, and that's just on the 52-week high. So if I zoom out to a 5-year chart, you can see this thing was almost $500 back September of 2021 when everybody jumped on it because of COVID. So it's come way down. It's trading at a 4.5 PE ratio or so, depending on where you look. It looks like both of them say 4.58. Doesn't pay a dividend or anything like that, but there are a lot of great things going for this company. It could be an acquisition target. They could also acquire other businesses to continue the growth, and it's trading at a pretty nice valuation here. I still like it. Of course, I liked it lower. I bought it around $115, $118. It's now $154. But I think this one could go a lot higher. I don't think it's going to $500 anytime soon. But if I look at a chart, guys, it still has a lot of room to run. So you can see it's bounced significantly off the lows. It had this nice little bounce here off around 117, 118 for the second kind of retest area. Didn't quite get down to that 115 level where the low was. But you can see it got 115 down here in May. It did it again in June. It did it again in September. These guys are reporting earnings this Thursday. So, I would recommend waiting and seeing how earnings go. If earnings maybe miss a little bit, if there's a knee-jerk reaction, it could be an opportunity to buy the stock. They could have a great earnings and the stock could rip higher too. So it's really hard to predict what's going to happen. But looking at this from a technical level, it's balanced. These are some nice, healthy green candles. It's probably going to get resistance where it's at around $160 or so, $150. And I think that it could continue though. It's at 153. I think, if you look at this moving average here, it's about 161. So it's probably going to top out around there and then wait for earnings and see what happens. First pick, not in any particular order, Moderna, ticker MRNA. So when I look at some of the fintech names like Visa, for example, reported strong earnings. SoFi, which is kind of a hybrid bank, fintech type play, reported solid earnings, actually raised guidance this morning. This next one is DLocal, okay? Now this one's about a 68 P ratio. It's a small cap, 6.6 billion. They're gonna report earnings here on November 16th. So you have to be careful with this one. It was $51.18 in the 52-week high. This is back about a year ago, November 9th, 2021. And it's gotten down to $15.19, which I think was probably a strong buy. So looking at this market cap, $6.6 billion, again, PE roughly 70, depending on where you look. And if I look at the financials on this one, okay, if I look at the growth from previous quarters, 71% year-over-year growth with 30% net profit margin. Now, this isn't a SaaS company, but if you're doing a quick and dirty rule of 40, you're at like 100 here. So this is a rock star growth stock that actually has a PE ratio. It's expensive, but it's expensive because it has growth. Now, there's certainly risk when you think of border payments and you think of the macroeconomic economics, geopolitical risk. You think of certain areas of the world going into recession. But I do think there's a strong possibility that you might see this one report earnings positively. It's going to be November 16th. I like this one at this level and lower. It's at $22. And honestly, my target would be $20 or less. But even at $22, if I'm thinking long-term, if this company does what it's supposed to do over the next 5 years, these are long-term holdings, holding them for 5+ years, dollar cost averaging. I like these levels and lower on DLocal, ticker DLO. Now, this third stock on the list is Tesla, and it has run a little bit from the low. It got down to $198.59 just for a New York minute, and it bounced off that. It's trading right now pre-market at $233. But I still think this is attractive. Another one that has a P ratio, albeit a higher P ratio at a 70. This is a 5+ year type of a holding. I thought the last quarter here, they have already reported earnings. I thought the earnings were pretty good. You can see here they reported $1.05 adjusted EPS on expectation of 99 cents. So that was a beat. Revenue is $21.45 billion. That was lighter than expected, but not by much, $21.96 billion. The net income gap reached $3.33 billion, more than double from a year ago. These guys are continuing to grow, build out more cars. There's a lot of drama around Elon Musk and Twitter, and now he's putting too much time in Twitter and he can't put time into Tesla. But I think this is a great long-term investment. I think EVs are going to be the future. I think Tesla's going to have a large part of that market share regardless of competition. And I look at these guys as a technology company, not just a car company. They have higher margins than the average, competitor. And they're going to look at doing things like robots, like Optimus, that maybe could cook you a steak at home. Who knows what the future brings? I think Elon Musk is a sharp guy, and as long as he's at the helm of Tesla, I like this one as a long-term investment. Ticker TSLA. Okay, you need to be careful with this next one, MercadoLibre, ticker MELI. I still like this one a lot, under $1,000, although it was a $600 stock for the 52-week low, and it's bounced aggressively off recent lows. It got down even in the 700s recently here. So it's trading right now at $927, and this reports earnings on November 3rd. So that's going to be in 2 days on Thursday. So you have to be careful because if they miss earnings, it could sell off. If you get a knee-jerk reaction, I think it's an opportunity to buy, just like Amazon was. Now, they could report great earnings and it could rip. This is one that you accumulate, I think, over time. I don't love the stock price at 900 and above, but I think if you're holding it 5 and 10 years, I still think there's a lot of opportunity. Just be careful with earnings. It's a 190 P ratio. This is a market cap of $45 billion, but I do like this one. The reason I'm putting it on this list, I think it's an opportunity if it sells off on earnings. So pay attention on Thursday, post-market for MercadoLibre, ticker MELI. Okay, let's stick with that same theme here. DataDog is going to report on Thursday post-market along with MercadoLibre and several other names. So keep this one on your radar. Now, I actually like this stock even at this price. Pre-market, it's about $83. I definitely like it below $80. 75 and under is the target if you can really get it. Now, the 52-week range is 75.54. We were buying aggressively in Discord around that $75, $76 range. But if these guys miss earnings, you could see another knee-jerk reaction. You could see new lows. And I think that would be an opportunity if you're a long-term investor focused on 5+ years. Now, this, of course, has a P ratio, but it's astronomical. And if you don't understand SaaS, you're not going to want to buy the stock. It might be in your spec basket because it's a 4,477 P ratio. And you can say, Eric, how do you justify that? Well, this is a SaaS company, software as a service. So I'm looking at things like Rule of 40, net dollar retention rate. I'm looking at EV NTM revenue. And this one checks all the boxes when you look at its competition, if you look at the other stocks within that SaaS cloud sector. I'm very long on this. I've got friends that work for DataDog. I've done some really deep dive analysis and research on DataDog. And this one is one that I really believe in if I look at 5+ years. Because if you look at a few quarters ago, they had no PE ratio at all. Then it's a 4,000 PE ratio. Then it's lower, then it's lower. They're growing into that valuation, just like a Tesla did where it didn't have a PE ratio just a couple of years ago. And now it's trading at an actual PE ratio, which every time they report earnings, it seems like it goes lower and lower. And that's what's going to happen with a company like DataDog. But you have to be careful. And if you don't understand SaaS, this might not be your huckleberry. It is a little bit higher of a risk because it is an expensive stock. But if it sells off after earnings and maybe it gets new lows, 75 or under, that might be an opportunity for the right investor. So take a look at DataDog, DDOG. Now, if you follow this channel, you know that I am bullish on Alphabet Google long-term. Under $100 a share, I think it's an opportunity for a long-term investor. P ratio right now is 18.77 based on a $95 or so stock price. It is up slightly pre-market. It's at $95.81. The low on this, the 52-week range, $91.80. Now, I would love, if you're in Discord, you know that my target, because I've owned this stock since it was in the 40s. I'm up on it nicely, but my target would be if it gets to 90 or less. Now, they they already reported earnings. I think the odds of that are pretty low, but it's something to keep an eye on. With that said, I think this is when you accumulate under $100 a share. So even at $95 as a long-term investor with 18.7 P ratio, I like this one a lot. It was a $1 trillion market cap. Now it's $648 billion. And I can argue that what you get, yes, if you go into a recession, this is impacted because it relies heavily on advertising. But if you're looking past that, you're accumulating shares and you're thinking longer term, you're thinking 2+ years out, this stock, in my opinion, will be much higher. This is Alphabet. I prefer the A shares. That's GOOGL. You can also buy C shares, get rid of the L. It's GOOG. The only difference is voting rights, but Google GOOGL is the one I own. Check either out. I think it's a great long-term opportunity at these prices and lower. I'm going to stick with the theme again. Go mega cap tech. They also reported earnings last week. And you already know the earnings. I'm not going to go into the details, but this is a 25 P ratio. It does pay you a 1.17% dividend, and it's a mega cap, $1.73 trillion. So this one, same with Google. These are not going to be bagger stocks. In other words, they're not going to be 10x stocks. You're not going to take a $2 trillion company and easily make it a $10 trillion company. But I do like this as a high quality kind of a core stock, one that's going to give you some stability longer term. People say, well, they're trading like penny stocks. They went from 350 to 219. Well, you want to buy it low and you want to sell it high. Okay. This is an opportunity, especially if it goes any lower. The 52-week range again, 219. I like this 225 and under if you can dollar cost average. It's slightly higher than that now. Long-term investment, though, you think of Microsoft Azure for public cloud services. You think of gaming. I know there's going to be some drama with Activision if that gets completed or not, that acquisition, but they have so much more going for them. This is a conglomerate. Same with Google. It's like a technology conglomerate. And you're getting so many pieces of the puzzle. We've covered these stocks many times on the channel. Check out Microsoft, ticker MSFT. Okay, so this stock we've never covered on the channel, at least not that I can recall. It does have a P ratio of 32.27. This one's Fiserv. The ticker is FISV. Now, these guys did have earnings. I'm going to show you some of those highlights. This was $87 for the 52-week low. It was $110 on the 52-week high. This is not going to be a hyper growth stock or anything like that. I think there's opportunity here because they are cutting costs. They're doing some things like reducing headcount, and I think you're going to see the profitability surge. And this is one that I believe will do fine longer term. It's going to be more of a mature type growth stock. So again, mature growth, guys. Company raised 2022 organic revenue growth outlook to 11%, adjusted EPS outlook 648 to 655. This one came up on one of my screeners and I looked at it closer. My sister-in-law actually works here as well, and it's a good company. It's a solid company. They've also bought back some shares of stock recently here. The company purchased 7.6 million shares of common stock for $750 million. So if you look at this stock, I mean, the company is valued at about a $65 billion market cap. It's a decent chunk of buyback. Again, this is not a crazy growth stock or anything like that, but it's one that I think is interesting, one for you to at least explore. So I would look at this one $100 or less, and I would want you to do a lot of homework and some due diligence because I haven't spent nearly as much time on this stock as the other 9 on this video, but check it out, Fiserv. Now I've got 2 more stocks, so do stay tuned. Before I get to those, I need to announce this video is sponsored by The Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. And reminder, guys, they don't tell me what videos to make, what stocks to cover. They're a great partner. They allow me to bring content like this to you for free on YouTube. So check those guys out. We also have a private community, and you can check that out, patreon.com/firedupwealth. It's a great time to join. It's a new month. We've got a Discord community. We also have other options, affordable options like exclusive videos for $10 a month, where you get tons of podcasts, hours and hours and hours of content for only $10. And it helps support me and the channel so that I can continue to do this on YouTube for free. Okay, so I appreciate your guys' support. Let's get on with the next 2 stock picks. Okay, so if you follow the channel, if you watch my top 20 cloud stocks, that's a patron exclusive, you know that ServiceNow is high on that list, and it's more of a mature SaaS. This is another one where it didn't have any kind of P ratio, and it just slowly keeps growing into itself. It's growing to its valuation over time. It's a 425 P ratio. They just reported earnings here last week, very solid earnings. Right now, it's about $426. The 52-week range, it got down to $337. So obviously, I like this a lot better under $400, but I don't think it's a bad price, even in the low $400. It was a $760 $760 stock on the 52-week range. This is November 2021. Not saying it's going back to $700 anytime soon, but longer term, this company is doing fine. If you listen to the earnings call, this company has had the luxury of having Frank Slootman and Mike Scarpelli, that's the CEO and CFO of Snowflake. Before Snowflake, they were at ServiceNow. And now they have McDermott, who came from SAP, and he's a great leader as well. So ServiceNow has been blessed with awesome leadership over the last 10 years. And this stock has done very well for me. I've owned it for a long time. I'm up on it nicely. But if you don't own the stock, I still think it's attractive here. And I think long term, this is still an opportunity. Check out ServiceNow, ticker NOW. Okay, this last one gets a lot of haters. I get it. It was a SPAC. It was a Chamath SPAC. And so everybody wants to throw it in the trash. But I've been telling you over and over, $5 or less, SoFi stock is an opportunity to buy because it's trading under or at price to book at that $5 range. Now, if you just watched my video on October 20th, I did a top 5 growth stocks to buy now under $10. And at the time, SoFi was at $5 a share. If you look at it pre-market, it's now over $6. It popped 10-15% after earnings. They reported this morning pre-market. SoFi technology stock climbs after record Q3 revenue, adjusted EBITDA stock up 15% pre-market. Did you buy it at $5? You should follow this channel, subscribe, click that bell to get notifications because we're bringing valuable content to you like this all the time. So their GAAP EPS, they beat by 1 cent. They're still losing money, but you say, why would you own this stock versus another bank stock that pays a dividend? Because these guys have growth. And at JP Morgan and Bank of America, you own that for the dividend, but it's not giving you a ton of growth, okay? Increased a full adjusted net revenue guidance to $1.517 billion to $1.52 billion versus 1.5 consensus. So they raised guidance. I've seen mixed reports on Twitter saying that they missed guidance. They didn't. They beat on both and they raised. You should see some of the numbers. I mean, absolutely astronomical numbers. When you look at the member growth, I mean, look at this. They just keep growing more and more members. I'm seeing more and more advertisements, NFL exposure, SoFi Stadium. I like this one still, even at its price now at $6 a share. I still think this thing could go higher. I'd much rather buy it at $5, but I think this will be easily a $10 plus stock if you're holding it for the next couple of years. And this for me is a 5+ year. It's in my spec basket. SoFi, check it out. If you're not a subscriber, subscribe right now because you don't want to miss the next video we put out, and click that bell to get notifications so you get notified as soon as I release a video. If you like this video, like it and drop me a comment. Why? Because it helps me. It helps the algorithm, helps more people find the channel and find this video. So do me a favor, share it with your friends, like, comment. I appreciate your time and attention. Hope you have a great rest of your day. Take care.